All right. What's up, ICA? I know it's been a minute. Thanks for being patient. Had a couple of things to take care of this last month, and I've been watching the graphs and watching the charts, but not really trading too much. But I know it's been a minute. I wanted to get you guys a bit of an update, especially since we've had such crazy moves recently. And so let's get right into it. What I want to start off with was going over last Friday and just what came in our scanner near the end of the day. Okay, last Friday we got these ones that came in right after close, and you can imagine, October, mid-October, 1.6 mil, 350 while it's at 368. So we're right around that 370 range right now, but you can imagine there's these strikes that are now aiming for right under 350. Okay, all of these happen to be October. It's not super short, right? It's not next week, so that's why these scores were a little bit lower. And the strike relative and how much the premium was, 3.7 mil for SPY is a decent amount, but they're taking longer expiry, so they're looking for a little more safety. It could be a hedge, but at the end of the day, there is quite a lot of bearishness going on overall in terms of the macroeconomic approach. Right with Monday, you can see there's a little bit of a rebound that started, especially because it was so overextended to the downside. Now, really quick, let's just update what happened today. Today is Wednesday, September 28th. You'll see near the end of the day what we did. Coinbase got this very interesting strike for 105 score, strike 105. This is a very big move over the course of the next couple of years. If you're listening to, one of the potential theories of how the entire currency market, et cetera, and what's going on in terms of the global macro, the economics of it, there is talk about how cryptocurrency could be a way for us to bridge and connect more currencies around the world in a way. And so I could see in a big picture how this is quite a lot of time. And could Coinbase head back over 105 by 2024? I think that's not too bad of a look. But again, this still is dependent upon the company itself continuing to make money with the trades of crypto. And so if crypto struggles, they're not going to make as much. If crypto starts to go back up again, over the next 2 years, that's a solid chance, I would say. Not exactly 2 full years, but you get the idea. What else came in? This one has been interesting. We see a lot of these IWM ones, a couple $1 million near the end of the day. They took a smaller amount right here, if you notice. And yeah, I mean, IWM has gone up back toward 170, but I want to say like breaking 170 and staying above 170 is going to be tough. Same with something like Apple. I'm going to go into our charts in just a moment and show you guys that. Let's actually do that real quick. Okay, so I'm going through ICA for Omicron class right now, and just going through some basics of giving them the chart and these basic trend lines that do exist. And I want to point out, we obviously broke through this trend line. We're now in this downward motion. We're in this situation right now. But I wanted to go over a couple of things that you guys are also familiar with. First off, we got to go through and show how, you know what, I don't even need all this right now. Let's go through here and just show you how your Fibonacci from this bottom to the very top. Let me adjust that as nicely as I can. Okay, where's the next target? I would definitely say is down toward this level. You see that? Where you had this double top in the past, you can say we will probably reject off of these peaks right here that exist on the left. Be aware of this guy and this guy, right? So it's likely that we could pop a little bit once we hit that range. In addition, right, the 50% retracement, that's exactly where we're at right now. Another quick thing to think about too is if I went downward to this previous one, okay, our retracement from the top to where we're at almost hit the 0.618, all right, and then we rejected all the way down. And one thing that I kept on showing you guys in our past SPY charts is this way that I would copy, right? I was saying we have big drop number 1. We got another big drop number 2. And could we see the big drop number 3 happen here? Well, let's take a quick look here and compare the way that these things look. I love to use these bars pattern. And if you take a look to this motion, we had something fairly similar, okay? So you see how from here to here for the yellow, the drop down is about there. Then you have this rise into this little accumulation and distribution zone, and then it comes further down, all right? So what are we looking at now? Well, if each time things get a little bit more, you know, a larger move or a little bit more violent, you can see how we've already made that first retracement. We're coming down. Now that's to say if we expand it. There's also the possibility, hey, what if we're already done with it too? We technically, you can compare here. What if the reversal here is this, right? And this right here is this right here. So we just have, and we might not even break down below. Now here's the theory that does support that too. We're gonna go out and we're gonna pull this out onto a weekly chart. And there's a very interesting weekly trend line you may see here, okay? Now we gotta be kind of careful with it because you gotta remember some of these big drops, these crashes that we have, some of them may be triggered algorithmically, right? You know, stop losses, things are put in place for certain traders, etc. But let me delete this. There's also the talk of how we're at this trend line right here. Okay, so the top end of this channel, you can see, right? I actually think this is a pretty, right? Because since 2009, you got to keep in mind, they turned on the money printer, okay? Turned on the money printer because of how bad things were getting. And you can also imagine some people say, if you want to compare the crashes too, we could even take this motion, copy it down and talk about how that could be similar to what we're experiencing. But do you see how ridiculous that looks? Here's a part of the theory that does support that. We could be in this really ugly broadening formation. Right, so there's this expansion of prices, but you want to keep in mind, why is it that we had such a big rise as well, okay? This entire rise that we had was money printing, okay? This was even further what we call quantitative easing, QE, okay? However, when do we start to come back down was exactly when the Fed announced that they're gonna start QT, which is quantitative tightening. A very easy way that I've explained it throughout our classes is the fact that if the economy was a big monopoly board, right? And every time you pass go, you would get $200, right? Think of that as the salary, right? $200, you know, back in the 1950s probably might have been probably a decent salary for you to be able to purchase stuff. But now today, it doesn't work because what has happened is the amount of money within the system is much, much more. Essentially, what has happened is the bank in the monopoly board started to add thousands and thousands of dollars over and over and over. And so people, instead of collecting 200, they're giving people more than that. They're giving people maybe $2,000 every time they collect and go past go. And as a result, it's leading into inflated prices and easy money. Once the easy money stopped, that's when we start to see these relaxation of prices, because you can imagine when you have 0% interest to borrow money for big companies, etc., you know, values can go very high. But once that interest rate starts to go up, right now we're going up to like 3 to 4%, etc. As it starts to, it'll start to drop because people aren't necessarily going to be able to pay. Like say, for example, let's call this 480K for a house. Yeah, 0%, people will be doing that. But at 4%, they're going to want to pay a whole lot less because the interest is going to add into their payments. And so ultimately asset prices are starting to drop. due to the fact that the Fed continues to talk about this tightening cycle that they're going through. And so the first bit of that tightening cycle has happened. And what a lot of people were talking about and why we've had so many of these rallies, you got to keep in mind, what were all these rallies about? You know, there's short covering, yes, but essentially this rally that we had right here was the belief that we suddenly had, you know, with our CPI data, that it had peaked, that it was coming back down. And as a result, that the Fed wouldn't have to continue to, you know, raise the interest rates, causing things to collapse. They actually might have to be able to relax on it, and things would start to head back up. And so that was, this rally here was the misassumption that the Fed was going to pivot. That's the word we keep hearing, P-I-V-O-T, pivot, meaning they're no longer going to raise interest rates. They might have to lower them, which will cause our asset prices to shoot back up again, simply because they might be slowing down the economy too much. Now, keep in mind, I also will try to post the Fed meeting that I had recorded, because I had it tracking it by the minute, you know, behind it. And I want to show you how certain words that the Fed uses causes the public to react in certain ways. Okay, so just to understand, there is this right now, this belief. You can imagine this trend line. Let's make this trend line a little bit more significant. Let's just make this the green trend line. Okay, this is the overall big picture trend, and you can imagine, yes, it technically is the top of this line that we've drawn, right? Right, you can't technically, this one would be a flat one right here, and then you also have this expansion of this triangle. So there are people that saying, you know what, we had this blow off top, and there's the possibility, right? We had the blow off top. We broke through not only this resistance line, but this resistance line. We hit a top, now we're coming back, and we're back down to the normal line that we're, you know, the top of it. So there is still a possibility we could come back down to this, and that would still be in an uptrend for SPY overall. Keep that in mind. And that's actually back toward the 300 range. So, you know, I wouldn't necessarily rule it out. It would definitely take some push to get there. And you got to keep in mind, margin calls, big money type of situations, that does increase the possibility that, you know, once we break through certain levels, there's the talk of how once we break through the top of this box, we're headed toward the bottom of it. And we very likely will have a test at our previous pre-pandemic highs, okay? And so that's at that, what, 330 range, etc. And what we're now really focused on is really this little range right here, this little zigzag or correction that we had, okay? In terms of Elliott wave as well, you guys kind of see how we very much are not done with the movement. Here, we're not done with the movement. Why? Because you can imagine there were A, B, C, right? Or actually, let me zoom in on this a little bit so we can get some more detail and be a little bit more, right? The whole SPY move here, I was showing you guys since the beginning, right? You could say 1, 2, 3, this is A, okay? 1, 2, 3, this is B, and then 1, 2, 3, this was C. So you have A, let me use a different color, A, B, C right here, okay? Then we have a rally A, B, C up, a bigger one. So now we can say move 1, move 2, right? And then you have a big ABC coming down here. A, B, C, and then up A, B, C, okay? And then we had another one that didn't really go as far down. You could, I would argue here, okay? So, let me use the yellow, second move down, okay? And then what do we have? We have an ABC back up, right? A, B, C, that one was a big rally. And so now we have 1, 2, 3. Could we see another 1, 2, 3 up before we go further down? I think that's definitely very possible. What are the other things that give us potentially confluence for that? Let's take a look at our RSI. Let's take a look at my stochastic that Chef has blessed me with. Thank you very much. Okay, so what do you guys see? Well, compared to previous lows, we do not have divergence. You can see that we're still showing, headed down, but we are quite overextended on that daily. And at least on these smaller time frames, you can imagine there was relaxation back to the upside. Keep in mind these little moments of divergence, right? Are moments where you could learn to catch these quick moves for some bounces, but keep in mind they're small picture. They're within minutes or hours at the most, not going to take super long. So make sure you get out of them quick. Another thing to consider too here is I want you to be careful. This isn't divergence and just yet because this hasn't fully curled up yet, but we do have a little bit potentially forming. We'll have to see. I would not be confident in it completely just yet, but with the way that SPY is looking right now, let's go something a little bit closer. We do have a little bit of room. We had this gap that formed, and so I wouldn't be surprised if we still continue to fill that gap before we reject further down. Okay, that would be in terms of the ICT approach. We would have, there's some liquidity here to grab, and there's potentially liquidity up here for that to grab. So yeah, it could head back up toward here, but overall we still have bearish momentum, and these are just potentially short covering rallies or quick algorithmic moves because we've actually relaxed back down to certain bigger moving averages. Okay, so let's pull that up too. Let me pull up my this one. So if you can take a look here, I'm going to pull up my daily. You can see in here on the daily 5, 10, 50, 100, and 200. We're now below just all of them. But here's the interesting one. Take a look at my weekly. Your weekly, we're sitting right here at the blue one, and look at that. That blue's at 200. So for the last 200 weeks, we're at a very significant support. And yes, I would say the symptoms of the market, meaning the way that our macroeconomics look, there are potentially lots of problems. But we also are coming up to midterm elections. And I think that we also here, if this does bounce back up, I definitely could see us rallying back up to some of these other moving averages. There is also the possibility that we might get a big rally and then a big dump afterwards, as all of those, as we reject off of this line. So just be careful. We got to keep in mind it has a lot to do with the announcements of what the Fed plans to continue to do. Okay. Before we let you guys go here, I wanted to pull up one of these in here. So this might look a little messy, but there's particular parts of this I want to pull up for you guys. Let's real quick. Nope. Okay. Let's go into our SPY. So what I want to show you here in SPY on this other chart that I have, we're going to go out to our daily. I'm going to get rid of a lot of the extra indicators because we don't need to see that right now. Okay, so this is the one that I'd been putting a lot of extra info on. Just bear with me. I'm going to point and direct our eyes to the parts that we want to see. So the red lines, I do have to add them onto the future here, but the red lines are essentially where our Fed meetings were. And so, we had Fed meeting, we had Fed meeting as well. So we had a lot of pushes down due to the way that the Fed was reacting. But in here, I don't know if you guys can really see, but there's a bunch of white numbers: 30, 66, 26, 62, 22. 7 and 12, 17. And so right now we're at about a 17, 16 number for fear, all right? And it was a 55 up here, 66, 62, and 55 were the high or the greediest that we've gotten. And so 30, 26, 22, right, 18, 21, 7, 12, 17, it is starting to get to the point where we are actually getting kind of fearful. And being kind of fearful means that there is a possibility that we might want to be a little bit greedy, potentially seeing it head back up. Now, what I want to point out is we got to keep an eye on this volume too. We have people starting to come in to purchase. Will that continue to give us more and more volume in the green? Then this will pop back up. But if the sellers start to step back in, we can't break back above certain levels. So for example, right here, you know, this 373 range right here, if we can't break back above that, what I would expect is that, think of it this way, anytime we want to break back past, you know, previous lows, right? Look here, we're back at the previous lows, right? Previous lows. There's going to be a big fight. So that's what I'm expecting. I'm expecting there to be some zigzags here until we determine a direction to go. That's the hard part, because again, the next Fed meeting isn't going to be till November from what I believe. So there's everything's speculation up to that point, what the Fed might do, but keep an eye out for CPI readings and those other reports of how the economy is doing. One of the big fears right now is due to the way that the European markets are, they might have to turn on the money printer because of how bad things are getting. And that could actually cause, you know, markets all over the place to start to rally because more money is being injected. But that's only going to cause the CPI and the inflation data to continue going back up. And so if they start turning on the money printer and we start putting more money into the system, at what point do they turn back around and cause a bigger type of crash because of the way that they have to balance the markets at the end of the day? So, you know, inflation's still a problem, supply chain, etc., jobs market, there's still a lot of things to keep an eye on. But again, you guys have my predictions. Right now, I think we're gonna chop around in here for a little bit. And especially because the next big expiration for options isn't till October 21st, right? I wouldn't be surprised if market makers do their best to absorb that liquidity through that 21st. So you're going to see something like this, or something like this, where you have this chop up motion and you don't really go in any specific direction. And realistically, the market could potentially just trap more people. So these people are going to get trapped. We might head back up a little bit, and then these people get trapped before we create some sort of broadening formation type of thing. That's also very possible here. So keep an eye on your indicators. If you're in the chat and watching us in Investor Central, understand that some of us are right now using these fair value gaps and super order block type of tools. I'm still getting myself a little bit more familiar with what's going on. They definitely work a little better on smaller time frames. But one quick thought of it is that the theory behind ICT has a lot to do with the fact that they're seeking out a way to screw the most people over. And, you know, I was saying that here, this is that next big way to screw people over. So we could actually head up there before we head back down and fill up this gap. So just be aware. We'll see how we react to this top right here. Okay, we have already broken through, but do we break back down below, or do we reject and head further up? Look for those retests, and those could be your indicators of what direction we're headed in the next couple days. Let's do this. I gotta go back to the unnamed one. I'll pull up Apple real quick. This week, I think, is essential for Apple. Not only is it going to be the end of the month, but also Apple is at a critical number, a critical level of 150. And if it fails to hold it failed to hold 150 today. It peaked up above 150 and then closed and dropped right afterwards. So that's I know this chart looks a little uglier. I will point out that down here, there are signs that we very possibly could have another pop, right? You're showing some forms of divergence here, especially on our daily. But do we have a lower volume secondary test? Let's see. Going off of the notes I gave myself from before. Oh, volumes, right? Do you see how the selling volume stepping in quite hard too? But I will point out here, what is our lesson about effort and result? You had all these bears step in right here today, and we ended up closing up higher, okay? So here's what I'm gonna say is for the 150 range, we're looking at the end of this week. If by the end of this week, right, you see we're still in indecision. We peaked down below, but we haven't revisited the June bottom though, which is technically, if you think about SPYs down here right now, okay? So if Apple does struggle, it could take the entire market with it. And you do have to understand the selling's coming in. The selling died down a bit too here when you consider about it in terms of the weekly. Big sell-off, started to push back. And here is the indecision moment. So where we close, whether we close above 150 or below 150, I think will open up the possibility of revisiting these values or revisiting back up here, okay? So keep an eye as the week close comes to end. I do believe that that will give us a hint as to the next potential move. Also keep an eye on big money for the Discord too. If Apple comes in with a lot of bearishness, we may want to keep an eye out for that possibility. Okay, equity, people buying equity, right? Short term, pop above 150. You can see how this one gained. It went from 90 cents up to $2 within that day. Right, okay, here we go. Careful though, this one's for 25, down another 10 bucks, and that's quite a bit of money. So this is a big bet that Apple's gonna drop. And this is all from today, right? 7 mil, okay. Right, short term bounce, you see that? But then big picture, long-term situation, you can understand that there were some puts being taken. All right, that's all I want to talk to you guys about today. If you guys got other questions, don't hesitate. You guys know how to find me. I do want to point out, I'm very happy to see how you guys are using the ICA graduates channel, talking to each other a little bit more, conversing about what you see and helping each other out. So I think that's awesome. And I want to, just let you guys know, I love to see that. Keep it up, continue to chat with each other, especially, nobody in this ICA channel, I mean, there are people that have been trading for a while, but if you consider from the day that you started learning with me till now, at most, some of you guys have been in this situation for maybe 6 months. And that, again, it's not going to change everything overnight, but the consistency, the continuance of trying and analyzing and taking a look at what's going on, those will help you ultimately, make better decisions and get into better positions over, and think where you might be in 3, 5, 10 years from now. This takes experience, it takes development, but I'm cheering you guys on over here. So please let me know how I can help. All right, I'll chat with you guys soon. You guys have a great rest of your day.